This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachordes. Thanks for joining us at XM.com. President Vladimir Putin unleashed mayhem in financial markets on Tuesday after he announced to the world that Russia has developed the first successful coronavirus vaccine. Global bond yields erupted higher as demand for risk-free assets dried up, which in turn mangled gold prices and to a lesser extent wounded stock markets. Higher yields on bonds make bullion less attractive by comparison, as the metal pays zero interest. Similarly, rising yields can be a bane for stocks because they imply higher borrowing rates for distressed corporates and fewer share buybacks. In this specific case, the news also ignited doubts about the market's leadership. The pricey valuations of stay-at-home winners like Amazon and Apple may not make much sense in a post-vaccine world. Gold fell without a parachute on Tuesday, losing more than $100 as short-term momentum-chasing speculators were shaken out. The fact that Congress remains in a stalemate about more stimulus may have added fuel to the carnage. The gridlock implies that any eventual deal may be smaller in size and thus the government deficit won't explode completely, which is negative for gold. Many are now asking whether gold has already peaked. It's a tough one to navigate. If this is the beginning of a sustained and healthy rally in bond yields, then yes, gold's best days are likely behind it. But it's difficult to envision that. If yields continue to spike, Fed policymakers might ultimately step in, first with words and then with policies like yield curve control, to tame the beast. Besides pushing rates back down, that would also hammer the dollar lower, both positives for gold. In the broader currency market, there wasn't much reaction to all this. The defensive yen did lose some ground, but that was about it. It's not all quiet, though, as the Reserve Bank of New Zealand went all out overnight. Policymakers expanded their quantitative easing program and opened the door for using negative interest rates and purchasing foreign assets. Additionally, they made it very clear they would like to see a lower exchange rate. The kiwi dollar naturally fell on the news. This was today's Daily Market Comment. Thanks for joining us at XM.com.